Hi, my name is Alex Sutherland, and I want to be talking to you about Social Security taxes today. And a lot of people don't even think about taxes when they're making their Social Security decision, and that can be a really big mistake. This introductory video is going to share why taxes are really important to consider when you're making your Social Security decision. You know, the first question people think about when they talk about taxes and Social Security is, will your Social Security benefit be taxed? And the simple answer is, unfortunately, most likely. In fact, up to 85% of your benefit can be taxed. That wasn't always the case when the law first came into effect in 1935. Your benefit wasn't taxed at all. And it wasn't until 1983 that the government passed a law that said up to 50% could be taxed. And then in 1993, the law that said up to 85% can be taxed. The key word here is up to, meaning a maximum of 85% could be taxed, but also none of your benefit could be taxed. So what goes into determining how much of your benefit is taxed? Well, we really need to take a look at a 1040 return to understand that. And we're going to look at line 20A. If you notice that your Social Security return right there, when you file taxes, you're going to put your Social Security benefit. For this example, I put in $26,000. The real question, though, is what's going to go on line 20B, which is how much it's going to be taxed. Well, it all depends on something called your MAGI. That stands for Marginal Adjusted Gross Income. It means everything above this line on your tax return added together plus half of your Social Security benefit. Let me say that again. Your MAGI is everything above that line and half of your Social Security benefit. Then the IRS will take your MAGI, put it into a formula, and determine what threshold you're at and see how much your benefit is going to be taxed. So think of it this way. The higher your MAGI is, marginal adjusted gross income, the more of your Social Security will be taxed. And I'll show you an example of that. So you could end up paying zero taxes on your Social Security benefit, or it could be as high as $22,100, which could be taxed. It all depends on your MAGI. Let's take a look at an example. Let's say you're retired and you're claiming $34,000 of Social Security benefits. That's not quite enough to live the life that you want to live, so you're taking out distributions of an IRA, a 401k, and that totals $26,000, so about $60,000. But let's say you need some more money. Let's say you want to go on a cruise or on a trip, a vacation, or maybe you have to pay a medical bill that's unexpected. You need to take out another distribution from your IRA, 401k. But I want to show you what happens to your tax return. Let's say that distribution is just $1. So you take out one more dollar from your 401k or IRA. This is what's going to happen. It's going to cause another 85 cents of your Social Security benefit to be taxed. You're not going to get more Social Security benefits, but more of it is going to be taxed. So instead of paying taxes on the dollar, you're actually going to be paying taxes on $1.85. Let's say you're in a combined income tax bracket of 25%. If we do a little bit of math, 25% on the $1.85 ends up being about 46 cents. So when you withdraw $1, you actually only keep 54 cents of it. That's a lot of things. People don't even realize that their distribution is causing their Social Security to be taxed. It's something to be mindful of. Think of this imagery. You go to an ATM and you put in your credit card, you type in your PIN number, and you ask for $1, and it only spits out 54 cents. That could be frustrating. And it's best to plan ahead so you know what you can do about it. Let's talk about a couple different strategies or approaches. Here's two different couples, and they both need $80,000 to pay the bills and enjoy life. And their two sources of income when they retire is going to be Social Security and 401k or IRA distributions. Let's take a look at some of these examples. For the first couple, they elected to take Social Security early. And you know when you take Social Security early, you get less of it. So they're getting $30,000 of Social Security. And mind you, they're going to get that for the rest of their life. And they have to take out $50,000 to make up to get their gross income to $80,000. Let's look at their taxable income. Obviously, all of the 401k IRA is taxable, but not all of Social Security is taxable. They put in the MAGI, and it comes out that $73,855 is their taxable income. Only 79% of their Social Security is being taxed. Let's look at another situation. Let's say couple 2 decides to defer Social Security and take it at 70. Now, this means that they're going to get a larger benefit, so they end up getting $60,000 a year. Now they only need to supplement their income from their 401k IRA of $20,000, and their gross income is $80,000. Because they're taking less distributions out of their 401k and IRA, it lowers their MAGI, and therefore less of their Social Security is going to be taxed. So their taxable income is actually only $31,100. It's being taxed at only 35%. Now, that doesn't mean that either one of these situations is better than the other. It depends on a lot of different circumstances. But if you could save that much in taxes, why wouldn't you? In fact, the federal income tax on couple 1 is almost $7,300, and on couple 2, it's almost $1,200. It's a savings of about $6,000. You can actually take $6,000 less out of your 401k IRA and almost be in a zero tax bracket. It's important to think about these things before you elect, because once you do, that decision is over for you, and that's a permanent thing. In fact, the Society of Actuaries came out with a report that we can share with you, and they said that taking taxation into effect may be the key factor in determining when to take Social Security. And the truth is, a lot of people don't even think about taxes when they think about Social Security, and that can be a big mistake. You've probably seen this imagery before on our website. We call it your retirement puzzle. And we believe there's really 4 things that you need to pay attention to when you're dealing with finances and retirement. Your assets, your tax situations, insurance, and estate. We've been talking about insurance, Social Security, a government insurance program, and taxes, and how important it is to coordinate those two. You also need to pay attention to how to coordinate with other assets and estate issues like survivor benefits. There's lots of things that go into your retirement puzzle. But the biggest mistake people make when thinking about Social Security, and one that I hope you don't make, is they think about Social Security in isolation. They think about it as its own decision, and they don't think about taxes. They don't think about their other assets, and they certainly don't think about survivor benefits or estate issues when electing Social Security. Don't make that mistake, because you can really run into lots of trouble, and down the road you could be paying for it on your tax bill or other areas. So when you are working with someone, whether that's us or someone else, make sure you're working with someone who is knowledgeable and experienced in all 4 of these areas, so they can coordinate that decision so you're really making the best one from your situation. I hope you enjoyed this brief introduction on Social Security taxes. There's obviously a lot more to it as well. And thank you for watching.